All right, let's talk inflation. Nigeria's inflation figures for June finally in. Year-on-year, headline inflation decelerated 17.75% this month versus 17.93 in May. Food inflation, there it is, 21.83 versus 22.8 in the previous year. This is year-on-year again. Core inflation, 13.09%. Let's quickly go to our inflation figures around Africa. I also got some figures from Zambia, Botswana, Ghana, Namibia, Senegal, varying numbers from double digits to single digits. Let's talk about it with Mosope Arubayi, economist with IC Asset Managers. Mosope, you're very welcome. Good morning to you.
Good morning, and thanks for having me.
Great stuff. Let's start with Zambia. Double digits headline, 24% headline, 31% food inflation. What's happening in Zambia?
I mean, across Africa, you'd realize, given Nigeria's number now, majority of the countries have had like hotter inflation in June compared to May levels.
Yes.
And the main drivers are the usual suspects: food prices, transport prices. In some countries, you've had inflation go up by about 200%, for example, 200 basis points, pardon me, Botswana, for instance. And then the likes of Namibia, Ghana went up a bit by about 30 basis points, but we saw Nigeria decelerate from the numbers that we got today.
Yeah.
So zeroing in on Zambia, they have this FX liquidity crisis, which they've been coping with since last year. Their debt levels are very like scary levels, and they even had a default on a coupon payment sometime in November. And this has somewhat unnerved investors because right from time, the country has always had this tone-deaf attitude towards their debt numbers, and it crystallized in a default at the time during the pandemic. So they've not been getting as much FX inflows as they would ordinarily do, and we saw that affect the local currency. The kwacha last year was down by about 50%.
Wow.
The central bank also had to like introduce some FX pricing curves, probably similar to what we have in Nigeria. And even though that has stemmed the pace of the depreciation, but we still have the currency sliding down. Year to date, it's down by about 7%. So we see that weaker currency filtering into the inflation, the country's inflation numbers, food prices, transport prices, and then eventually the headline. And that's where you were at 24.6%. And the outlook doesn't look like it's pretty much going to change anytime soon. They've not had any concrete agreement as to how they're going to go ahead with servicing their obligations. They've not had any agreement with their financiers. It doesn't look like it's going to happen anytime before their polls next month. And after the polls, they'll probably want to take some time to get things in order before they even start negotiations. So we're likely to see the kwacha continue to depreciate through the year, and that would also filter into their inflation numbers. So maybe 24.6 is not the worst case for Zambia right now.
Yeah, because I wanted to start with them because, whenever we talk about Nigeria, we could keep talking about, and let's get to Nigeria now because so Zambia filed paces. So the deceleration, it's got a couple people wondering how, although we've seen that, this is what, second month now?
Second,
that we've seen. So what's up with with Nigeria's base effect?
The deceleration that we're seeing, it's for me, it's base effect. On a month-on-month, food prices were actually higher on a month-on-month basis. That just tells you that food prices are actually more expensive. Because on a year-on-year basis, we're coming from a year where we had multiple devaluations. That's in 2020. So you could see the impact of a high base effect moderate year-on-year inflation. But what we should be focusing on, particularly food prices, is the trajectory of the month-on-month. Over the next few months, I expect that food inflation will decelerate with the onset of harvest, and that should maybe quicken the pace of the headline deceleration. But there's also a caveat to Nigeria's harvest. You have security risks, and it's also subject to natural disasters like drought, like
flooding,
flood and all. So we're also not
dealing with those matters, right.
as well.
That
So
could upend the forecast.
exactly. So at the end of the day, we should just hope that the farmers are in good condition to actually harvest, and we don't have much severe natural disasters that we've had in previous.
Great stuff. Couple minutes to go. I'm glad we have food inflation up on there month on month. There it is, 1.11% increase on a monthly basis. I want to quickly ask you about what this means for MPC decisions around Africa. Quickly, if you can.
I mean, meetings are due to start next week, and you already had mentioned earlier from the global stance, they're pretty much going to be patiently accommodative. They don't look like they're going to hike rates anytime soon, even though we see that their inflation is inching high, and that bodes well for us because global investors will be looking for higher yields, and our market is one of the markets that return the best yields across the emerging market space. So yeah, it bodes well for our external sector. It's also a time where it's also a year for commodities, right? So I don't see our external sector coming under much pressure in the near term. So we're safe to some extent. However, it will now narrow down to the strength of individual countries, the economic strength, how good at their numbers. For example, a country like Zambia at some point may have to raise its benchmark interest rate at 8.5%. It's a far cry from where the inflation stands. The target is 8%. I mean, it just shows there's a wide divergence between their targets and what the actual outcomes are. And all these adds up to weakening confidence in the ability of the policymakers in that country to actually take control of the country, and it would stall inflows of investment. So I'm sure at some point when they resume negotiations, it could be on the table for them to have to align their targets with the reality of what's on ground there, and we may see countries like that hiking their interest rates. But generally, I think African central banks are going to be accommodative.
Fantastic. We'll have to have you back next week when South Africa's numbers come out. Too bad we couldn't talk about the riots. Mosope Arubayi, Economist, IC Asset Managers, thank you so much for joining us.
Thank you.